So Paramount's new leadership just dropped its massive turnaround plan. We're talking a $30 billion revenue target, $3.5 billion in profit, all bankrolled by a whopping $3 billion in cuts. The big question for investors is, can they actually pull it off? We're going to break down the numbers and the strategy behind this high-stakes bet. All right, let's get right to it. The headline number is a massive $30 billion in revenue by 2026. This isn't just some vague goal. This is a clear signal to Wall Street that the new team is swinging for the fences from day one. But, revenue is just one part of the equation. They're also targeting $3.5 billion in adjusted OIBDA. Now, that's just a fancy way of saying core profit. It tells us they aren't just chasing growth for growth's sake. They're dead set on making sure that growth is actually profitable.
So where's the money for all this going to come from? Well, right here. A huge $3 billion cost-saving plan. This isn't about trimming a little fat around the edges. No, this is a fundamental financial overhaul designed to free up a ton of cash to fuel their big growth plans. Okay, so those are the big, flashy numbers. But for any investor, the real question is always, how are you going to get there? Let's really dig into the nitty-gritty of the strategy behind this very ambitious turnaround. The new management team has certainly hit the ground running. I mean, in just over 100 days, they've already rolled out this comprehensive battle plan. Let's break down what they're prioritizing.
CEO David Ellison puts it pretty clearly here. He's not talking about a minor course correction. He's talking about a complete transformation. The idea is to take all those legendary assets, the movie studio, the CBS network, and use them as a launchpad for their future in global streaming.
And their whole strategy, really, it all comes down to these three core priorities they're calling their North Stars. It's simple, really. First, pour money into making hit movies and shows. Second, scale up their streaming business fast. And third, cut costs like crazy everywhere else to pay for it all. All right, let's talk about content first. And you gotta give them credit, management is being incredibly blunt here. They know they've got a problem, especially when it comes to the movie studio. I mean, look at this. They're not pulling any punches. This quote from the shareholder letter is a very direct admission that, Paramount Pictures has been a real weak spot, and it needs to be fixed right now. And their fix? Well, it's a huge increase in film production. We're talking nearly doubling their output to at least 15 movies a year. Now, the bet is that more shots on goal means more hits. But let's be clear, this is a risky play. It could totally reignite the studio, or it could just burn through a mountain of cash if audiences don't show up.
And they are putting their money where their mouth is. We are talking about more than $1.5 billion in new money just for content in 2026. This number alone shows you just how critical this content push is to their entire plan.
Okay, on to the second North Star. And this is what management is calling their single most important priority, scaling up the direct-to-consumer business. This is what they believe the future of the company really is.
So when they say DTC, what they really mean is Paramount Plus and their free streaming service Pluto TV. They see these two platforms as the engine for all their future growth. And they do have some momentum to build on. Paramount Plus just added another 1.4 million subscribers last quarter, which gets them pretty close to 80 million worldwide. The challenge now is to take that steady growth and, make it explode. So how are they going to light that fire? The plan basically has three parts. First, land huge exclusive content deals like the one with the UFC. Second, make the app itself better to use. And third, strategically raise prices to bring in more revenue. David Ellison really zeroed in on their big UFC deal. And this quote says it all, right? For the price of what used to be a single pay-per-view fight, you get everything. By tearing down that pay-per-view wall, they're making a massive play to pull in the UFC's gigantic, very loyal fan base. It's a potential game changer for their subscriber numbers. Now for the final North Star, which is all about reshaping the company's finances. This is that $3 billion efficiency plan we talked about, the one that's supposed to fund their growth and really drive cash flow. And again, this isn't just about small tweaks. That $3 billion in savings is coming from some really major moves. We're talking significant layoffs, selling off parts of the business that aren't core to their mission, and totally streamlining their operations and tech from the ground up. And they've put a firm timeline on it for investors. They're promising to find over $1 billion in savings this year, and then another $1 billion next year. They want to show everyone that they are moving fast to get their financial house in order. Of course, hitting these numbers means making some really tough calls. And these figures, They show the human side of this restructuring. Thousands of people are going to be affected by this, both through layoffs and as they sell off international assets in places like Argentina and Chile.
So after all that, the content push, the streaming scale up, the massive cuts, what does it all mean for the bottom line? Let's get back to the numbers and see what the company is officially forecasting for investors.
And here it is. This is the payoff they are promising for 2026. $30 billion in revenue, $3.5 billion in profit. And check out these two critical milestones. They expect both their streaming business and their film studio to finally be profitable. That's the turnaround story in a nutshell. And you can see that promised results right here on this chart. It shows a huge jump in profitability from 2025 to 2026. But it all, and I mean all of it, comes down to one thing: executing this incredibly ambitious plan without a misstep.
So there you have it. The strategy is set. The numbers are definitely ambitious. The one key question for investors now is just, can they do it? In today's ridiculously competitive media world, actually delivering on this vision is going to be the ultimate test. And that's really the big takeaway here.